American Federal presents this episode of Hedge Heads. John, what are we talking about?
Incremental sales in a market that is moving higher. What to do in marketing in corn, and we're going to talk a lot more about corn than anything else. And, a saying that I like, leave the upside open if possible.
All I want is a hog trade, John.
I got one of those at the end, too.
Welcome to Hedge Heads, where hosts John Prischmann and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, it's another Tuesday in fall. Soybeans have been exciting, though. So let's talk about corn.
Yeah, exactly. There's been movements in every market, movement in money and Wall Street, and you're seeing that in the commodities. It's causing many phone calls and a lot of confusion. So we hope to clear that up today, and we'll go over a number of things. But if it makes you feel any better, nobody has any idea where the grains are going right now or any of that. This is a pattern very similar to last year. As the funds started putting money in, the price rose. Demand is better than last year on corn exports, which was a record-breaking year, by 63% so far. So we're moving corn, but the corn number is ugly. We had the report, and nobody believes the yield. And that's not to get too sidetracked. If you're on Twitter reading all these people about how the corn's not there, how the USDA is wrong, you're definitely on the wrong track for better marketing. Now, the argument that are the numbers accurate, that's not what I'm arguing at all. It's that everyone's going to use these numbers, and you're going to be by yourself with the rest of the angry people online if you trade that way.
Can I say that I believe the numbers wholeheartedly?
Well,
no,
you can.
I'm not going to say that, but we have talked about it for years, John.
Yep.
The number's the number. That's what they printed. It definitely could be wrong.
The emotion's a lot more than it has been in the past, though, on these numbers. Not that it has ever been low, but the emotion after these numbers are released are what's throwing everybody off for marketing is that they want it to be something, and they say it's something, and then you should market that way. What we're saying is that generally doesn't work with the USDA's numbers. You'll have years like 2020 where demand's running well above what they expect. And then in those years, you would expect the numbers to lag and maybe not trade them as much. Those years are exceptionally rare where the demand is going to way outdo what the USDA has. Now, I won't argue that the numbers aren't accurate and eventually get fixed one way or the other, but you have to use these for your marketing. Is there going to be a better system in the future? Hopefully, but that's what we have. So that's what a guy has to use. And the numbers that we have right now gets us into what I want to talk about: incremental sales on the way up in a bear market, which is what we've been in. Whether this turns into a full blown bull, nobody knows. You have South American weather, you have our weather for next year, but we don't know what's going to happen. So you make incremental sales on the way up. Now, should you cover some of those sales that you're making with calls, or should you just have those sales be final? We'll go into all that this episode, but what
the answer is yes.
Well,
depending on your operation.
Yeah, it really does. And then, you know how I feel about corn calls. Like it's really hard if you're spending a lot of premium on corn calls to profit a lot on corn calls. So what we're looking at is that on the way up, making sales, and to me, they're final. I wouldn't be covering a lot of stuff right now because the margins are thin. So if you're profitable on corn, don't be throwing 15 cents away on a pipe dream that these USDA's numbers aren't right. Now, that being said, if I am covering corn, personally, I'm looking at the September contract. Nobody's done that yet, but I would rather be involved in September because we're like 448 for March, and we're in the 9 cents a carry there. I'd rather own a call that has all the spring weather and all the weather for South America and all the weather for the U.S. crop, I'd rather own that call for a few more pennies than own something shorter term, but that's just me. September is, they consider it old crop, so it's an old crop cover. That's where I lean a little bit. If you are covering, I like the September time period. But again, we're taking this on phone call by phone call basis and going over the numbers with guys. Also, December 26 corn is that one that comes up a lot. Should I be marketing that? And November 26 beans. So there's a lot of confusion in these markets, and guys want to know what to do with the stuff in the bin. What should they do with the stuff at the elevator, and what should they do with next year's crop? I'm keeping the upside open on everything next year, except for beans. If we have to do anything in beans right now and you want to see if it's going to keep running, trail some puts behind it. So let's just clear it up and make it a little easier to follow. Here's what you have in the bin and I need to sell. Then you would call a guy like me, and then we go over, should we cover these with calls? Or is that sale final? It depends on the farm's numbers and the state that they're in, whether it even makes sense to do it or not. Like North Dakota, if your basis is, 60 cents in corn, and then it's going to cost you 7 cents to store it, you're probably better off a month to store it. You're probably better off owning a call. Where if you're in Illinois, you're storing on the farm, you're getting, plus 20 on the futures. Like then you know what I mean? The sales would be final, and you wouldn't need to necessarily cover it. So it really depends on region this year. Way too much corn in the West and not enough maybe in the East. So we're going to be dealing with those logistics. We did that last year a little bit. We went up into February and collapsed, and we're seeing a pattern very similar so far this year. So incremental sales, don't overcomplicate it. Sell on the way up in a market that's rising. I mean, what are your thoughts on it, Ryan?
I agree.
Yeah, it's.
I mean, I don't know how else you do it.
I mean, are you covering it or are you not covering it? Not are you selling, because you got to sell? Yes.
Right. Well, yes, you have to sell at some point.
Are you covering beans and corn, or are you not?
Right now, I don't know what the answer. That's why I'm saying yes. Okay. It depends on your operation, right? Which is what you just said.
It does.
And so there are 100 different ways to do it, and it really depends on who you are.
Yeah, and there's not enough meat on the bone in this area to be buying 15-cent calls, that are shorter term. There just isn't enough money there for that to work out very well. So where in Illinois, I talked to a guy in Illinois or Ohio, it might work. But all in all, what you want to do is make the sales on the way up. And then if you get a dip, then consider doing it going into our spring and summer. Last year, we went up into February and we didn't have that dip. We made the highs in February. So incremental sales by themselves were the best answer last year, as long as you sped it up and made it into March. Now, that was an unusual pattern, but the way this is coming up and the way the money is flowing into these markets right now, you want to take the other side of their trade. They're betting big on grains, and then you are selling contracts. So that's the way I see it. I don't think you overcomplicate it, but I do want to cover new crop sales. So when you're talking December 26, November 26 beans, we have some ideas, and we're going to run them by you. I was going to talk about the short dated, which has always been a terrible name. What short dated corn options are new crop December 26 corn, that contract, in different time periods. So if you're making sales, let's say you want to lock in 470, 472. I've had clients lock in futures here. You might be doing hedge to arrives. Does it pay to re-own that in certain time periods for corn? Yes. I think it's very cheap this year. The answer
is yes.
Yes. I think that one, it does, because we don't know what we're going to plant next year. We don't know what the U.S. weather is going to be. So let's say you make this 475 sale in December 25 corn. You can re-own that for 11 cents at the money in a March short-dated call. And what that means is you would need it to go up 11 cents more than where it is right now for you to profit by the 20th of February. So in other words, if you're making sales and you don't want to cap the upside yet, but you like this, so you're selling 475, you spend 11 cents, or let's make it 10 cents for this call at the money, 470. Then you're locking in 460, but you have your upside wide open until the 20th of March. which would have been a wonderful hedge last year if you had it on. Because it would have essentially forced you out on the high, or you would have had to roll it into a futures, and then you wouldn't have been happy about that. So there is what I've been talking about the last couple episodes is don't give up on this upside. If you're making sales, call us to see if it makes sense to re-own it. Is there a way to re-own it? But there's usually a combination that you hadn't thought of. I'm going to come out with a sheet for my clients this week. So the sheet's going to have about 5 or 6 different things about corn on it, about old crop and new crop. We're going to go over stuff like we're going over right now. And then what the client will do is look at the sheet, and let's just say there's 15 things on there, 15 different ideas on there for corn. He'll see if any of these ideas fits what they do on the farm, and then he will call me, and then we'll go over it slowly or quickly, as depending on the guy, if he's advanced or if he's just starting. And that's how you get the ideas in front of guys, and then that's how you get the conversation going, and then just start planning, for old crop and new crop. Right before I came on the air here, I was talking to a client about old crop sales. He's got to decide whether he's going to roll the contract over, or if he's going to sell it and just take the money, or if he's going to sell it and re-own a call. So these are the conversations that we're having right now. These are the conversations that are really important to marketing going into next year. We're kind of right in that no man's land, though, as far as the corn price goes. It's not a price that you want to run out and lock everything in, but it's also a price that you maybe can't just pass up on totally either. You look at where did we get $4.73 for new crop corn, December 26th this year. That works for a lot of guys' numbers, and guys are interested in that price. But the reason why they hesitate on sales is because if I lock in $4.73, what if it goes to $5.25? Well, back to what we were just talking about earlier. There's ways to cover your upside. September calls, we talked about the episode before. But it is not your job to try to figure out the various combinations that's gonna help your farm. It's guys like Ryan and I that help guys do that. So hopefully we can do some of the heavy lifting for you and get some good ideas in front of you. And you might not use any of them. You might use 2 or 3 of them, but at least there are going to be ideas. So this week, clients that are listening, and you'll see a corn sheet come to you. And hopefully shortly after that, there'll be a soybean sheet. And then we'll start the conversations there. But in my mind, I'm interested in covering the upside in corn for the September timeframe, and I'm uncertain about the March timeframe. That's kind of where I fall right now.
No, I would agree. I'm the short dated options are always an interesting thing to look at. I think there's a lot of opportunity there this year too.
Yep.
I just pulled up the May ones, and May 470 calls are 16 cents. So you can give yourself an extra 2 months for 5 more cents.
Yeah.
There's ways to look at that. If you need to sell, want to sell, if you feel now is the right time to sell, there is still opportunity to, as you love to say, keep the upside wide open.
Yep, and I'm going to make it a thing. I'm going to keep saying that. Guys are too rigid in their marketing, and that's really where you go wrong, is that it's always black and white. Either I sell it or I don't sell it. And you want to find ways where you can get the best of both worlds. You got to figure out, does this market have potential? And right now it has potential. I don't know how much. The fundamentals aren't terribly bullish, but you have a lot of politics and you have other things affecting it that could make it go up a lot or make it go down a lot. So you need to be on your toes. But even back to new crop sales, instead of making that new crop December sale, why not just buy a March short-dated corn put for 11 cents? So what does this 11 cents get you? Let's break it down. This 11 cents buys you to see what corn's going to do until February 20th, meaning if corn goes down, you're protected. You're set 470 minus the 11 cents you paid. So you take, 459, or 459 is the worst that you can do on December 26th. In futures, going all the way to February 20th. Instead of committing those bushels at 472, why not give it, 11 cents and see what this thing can do into February? Can we make 520? Can we make 5? Nobody knows. And that's why you would do something like that, because you don't know, and that's how you'd want to try to hedge it out. So what you want to do is just start looking to see if there's alternatives, what you're doing, other than just selling or, just owning it or just storing it and then just selling it off the farm. There's definitely a lot of in-betweens, but we have been dealing with markets where there's not a lot of margin to spend money on stuff. Still, I'm in the camp. why would you take the upside of your corn out when you haven't seen any of the South American weather and the U.S. weather yet? Now we get to March and the U.S. and the South American weather has been really great. Then the strategy shifts to protecting the downside more than leaving the upside open. But anyway, that's kind of how it works this time of year in corn. Incremental sales up, and then just decide whether you want to cover that and it makes sense for your farm. And then on the other side, on the new crop sales, do you want to leave the upside open right now, or do you want to make that sales final? And those are the decisions that will affect your bottom line a great deal in the next few months.
Absolutely.
Yep. And those are the changes you want to start making or start thinking about making. And maybe it sounded very hard to follow and you don't know exactly what we're talking about here. We work with individuals, and then you over time you get a better understanding, and you don't want to stick your toe in the water until you fully understand exactly what you're getting into. But again, that's what the private conversations away from the podcast are all about, trying to figure out what to do or teach a guy how to do it.
Right. Well, because it matters what your operation is. But that being said, give me some ideas on soybeans here, John.
For soybeans?
Yeah. I mean, yesterday was quite the move based on some political announcement.
Yeah, even the report they said was disappointing. It actually wasn't disappointing at all for soybeans. It was 290, just slightly below what they thought in yield, slightly below what they thought for a carryover. Were the numbers? It's easy, and you probably have seen it splashed everywhere. They're supposed to buy 12 million metric tons by the end of the year. They bought in one so far, 1 million metric ton out of 12. If they're going to meet the goal, they need to buy 3 to 4 cargoes every single day. Trump says they're going to do it, and then all of a sudden he says they're going to do it by spring. Bessent said that they're going to do it by the end of the year. So more of the same. You get a lot of different answers. China has been buying lately, and but what you have to keep in mind is these are the numbers they expect. These are the numbers already in beans. This isn't demand in addition to what the USDA says at all. These are just numbers that we need to get to where the numbers are for 290. If we don't have those numbers, we're going to have 400 million bushel carryover for soybeans. So soybeans are the wild card here. How much of it's factored in? Are China going to keep buying? If China keeps buying, it's going to go higher. That's the way I feel. That's what you're going to need to maintain the momentum. But we also kind of hinted at it early. There's a lot of money moving around these commodity markets, out of stocks, out of the meats, maybe in the grains. No one really knows exactly how it's shifting, but there's a lot of money on the move. They probably saw grains as undervalued, and you've had a pretty good bid under them for a while, including wheat of all things. We have some wheat stuff that we're talking about for guys. So if you're storing wheat, give me a call. There is a couple different hedge ideas that we're looking at as wheat moves up. But other than that, you've had this big tailwind for the commodities, and we saw this last year. They bought it all the way into February, and then when they didn't buy, it dropped like a brick.
But tell me that, we're pricing ourselves out of the market right now too.
The beans,
are they going to keep coming to buy beans no matter what the commitment is if they're paying that much more?
And that's what makes this difficult, because the opinion is, yes, even though we're over the price of South America again today, that because they have to make these commitments, it's not that much money for China to be doing this. Like, they want to honor the trade deal, and they're going to buy these beans even if they can get a better deal. They're going to honor this deal, and they see Trump as kind of a short-term speed bump to their longer-term goals. So what's stopping China from buying a few cargoes from the U.S. or what they would normally buy it? Nothing. And they most likely will. So that's why the price relationships might not be as important as they have been in the past, because they supposedly just signed this trade deal, or they're going to sign it very soon. But one thing I don't like about these markets is we're one tweet away from completely going into a free fall. And that really makes marketing difficult for everybody. I think the producers understand this too. You get, China making Trump mad or not living up to the bargain. In 2 weeks from now, they could be at each other's throat online, and the markets could be in a free fall. Or the relationship could get even better. They could be living up to everything they say that they're going to be living up to, and we can have a really good grain market here for a little while. So that's what really makes it difficult, and I wouldn't really beat your head against the wall. No one knows the answer. No one's going to know the answer till it happens. You've seen how it goes in the past, though. good 1 second, terrible the next, terrible 1 second, great the next second. It's really hard to navigate this. That's why I'm more of a limited risk guy in this. But no, you don't have to try to figure it out. We're going to figure it out together day by day. What are your thoughts? You think that China's going to honor the deal? I think they are.
I think that we're one tweet away from a lot of different things.
Yeah. Yep.
So yes, I feel like they want to figure out a way to work with this administration.
Yeah, it appears that that's the way it's trended. You asked this a month ago, and clearly no one knew. And then Besant came out and that morning in that Sunday morning program said the deal's almost done. And that's really where the grains took off. And now we're getting to important levels where they got to make decisions that are going to keep going. The big one was corn, and you hinted at it. Is demand going to keep up on this corn? So far, so good. So that's good news. It looks like $4.20 is very cheap in the world for the fundamentals that we have. That's good news on the corn. That looks like a solid floor. It didn't want to go under $4.20, and it was selling better than it ever has by a long ways. So one could call that even general inflation there. You're getting grain prices coming up. The input prices still aren't coming down. But really, you're in a highly unstable environment, and it's really not predictable. And the best way to try to do this, navigate through this is with options. But back to there's really not enough meat on the bone here to be throwing a lot of money in and speculating on one thing or another. Just make solid moves that make sense for the farm, and that's what I'd be doing, making incremental sales on the way up, and then seeing if anything works in the numbers that you'd want to to cover sales that you've made.
Absolutely. All right, what else do you have today, John?
Oh, there's a lot of stuff. So I have a hog spread that I like. It's one of my favorites.
I love hog spreads.
Yep, I don't talk about hogs
like going
ever.
to Vegas.
Yeah, hogs move. Hogs move around. You're not going to be bored with them. It's a very good setup. I'm going to watch it over the next month, and it's something that I plan on entering. So those guys that have either been in it before, because it shows up nearly every year. This year it's showing up better than ever. There's a combination I like, and I will be looking at it into spring. But I will be, if I put it on, it'll be well before that. So if you're interested in hogs or hog spreads, definitely give me a call. We'll run through that. And on to cattle here before we end. Cattle was the hot market. Then Trump got involved, and it is no longer the hot market. Not only that, there's a lot of meat around this week that they're going to have to find a home for. So watch that box beef. Looks like it could weaken up. And I think this spills over into the economic side of stuff. You're starting to see in the box beef and the beef in general weaken up.
Steaks for Thanksgiving.
Yeah, well,
we're going steaks for Thanksgiving.
Unfortunately, it's a lot like diesel or unleaded gas. You see it plummeting on the board, but you don't exactly see that show up in the grocery store very fast.
Yeah, good point.
So it's demand has been dropping, and it is something that a guy needs to keep an eye on. Did we reach that price where beef actually is falling out of favor again? It's starting to look like it. We have beef piling up this week. I don't know where they're going to move all these loads, but there's a lot of it in the pipeline. So you're getting this back and forth, and that's what you would expect. What's my longer-term view on cattle? When cattle tips over, it has a tendency to be done. The argument would be the fundamentals are stronger or even stronger than they were at the top before Trump started tweeting. And my argument would be that when cattle falls like that, it's hard to find the speculators to get back in to drive it higher. Unless the meat moves a lot higher, I think cattle are going to have a hard time or the numbers tighten up. So right now it looks like, hedge on rallies is what I'd be looking at to protect my cattle. And that is my recommendation, that we go over hedges on rallies.
I thought it was going to take 3 years to rebuild the herd. That's true as far as the cattle cycle goes. But we've seen this in the past, and a lot of guys are calling me, is this 2015? As a matter of fact, since we've been on here, 2 cattle guys have called, and these is exactly what the conversations are going to be about. Is this thing over? Is it going to bounce? What do I do here? And we'll go over a plan. But I would be looking at protection on any rallies that we get here. If you look at the board, it's still very high compared to where we've been in relative history. The seasonal is for cattle to go up in the winter, though. That's very common for cattle to rise into February.
But on these rallies, you would want to protect the price. And I'd leave the upside open and look at something that has limited risk, but protects the downside. And that's kind of where I am at in cattle right now.
I'm 100% getting you a bumper sticker that says leave the upside open.
Yeah, but no one does. No,
I'm just going to stick it on your truck and you can drive around.
It's never going to catch on because everybody just makes a sale or they don't make a sale because leaving the upside open costs money to do. So it's really fallen into favor. You should make a bumper sticker, and I try to get it on but you really, in the cattle market that's bullish, you want to leave the upside open. In the grain markets before the weather markets, leave the upside open. In the middle of summer, after we've seen the weather, you can take that bumper sticker off my car. You don't need to leave the upside open. So what guys tend to do is leave the upside open when they shouldn't, and then take the upside out when they shouldn't. So if I could change that into leaving the upside open when it's the right time, I would. Definitely the right time in cattle. I wouldn't give it up on yet. But, in the grains, same thing there. I think you do need to leave the upside open. But there's a very real risk to the downside. I know guys don't want to hear that, but you've seen the cattle market before fall. And what I really worry about is the Mexican border opening and having another leg down here. I think that's a genuine concern. They want to get beef prices down. You have to trust that they're going to keep on doing that or attempting to do that. So you need to protect the downside. And that's kind of where I'm at in cattle.
Yeah, I would say cheaper steaks should help with tech layoffs. So make sure we drive that price down.
And I think you're seeing that. I think that you're seeing that in the broader economy. You're seeing the layoffs. You're seeing the stock market take notice. It's really hard to say we're in a bear market when the stock market is where it is. But if you look at the last 4 days, it doesn't look good. And the numbers are starting to trickle in, and it does not look good at all.
Yeah. Well, I love ending on a bright note.
Well, we that's part of our thing is to cover the interest rates and all that stuff. So I think a guy should go over it, and it's you can ignore the numbers, but they do not look good right now.
No, that's very true.
Yeah. So it's and it will affect all the commodity markets. And that's another reason why we go over that a little bit is that it will spill over into everything else. There is nowhere safe to hide if it all goes down. We've seen that before.
Yeah. Well, let's wrap up on that.
Sure.
Happy note. What's your number, John?
218-731-1578.
Thanks.
Yep.
I'm like, I forgot to do that. All right. Short intro. I'm going to lead it in with AmFed.
AmFed?
Yeah. And then you'll find.
Oh, American Federal. Yeah.
Yeah.